Well, good morning and welcome to the day ahead. It is the 23rd of September. I'm Nadine Blaney. Well, rate hikes from global central banks continue to send shockwaves through financial markets. In the wake of the U.S. Fed's latest hike, a half dozen central banks from Indonesia to Norway followed suit, and often with guidance that more hikes would come. The Bank of England raised rates and said it would continue to respond forcefully as necessary to inflation, and that's despite the economy entering recession. Market participants have also pushed up their rate expectations for the ECB, which is all but certain to hike again on October the 23rd. Meanwhile, Turkey's central bank delivered another surprise interest rate cut, and that's despite inflation there running at more than 80%, sending the lira to an all-time low against the US dollar. It all comes in the wake of the US Fed lifting rates by yet another 75 basis points. That's the third time in a row, bringing rates to levels not seen since pre-GFC. Now, while the hike was expected, it highlights how concerned the Fed is that higher prices will stick around if it doesn't take a fire hose to the hot economy. The Bank of Japan, meantime, intervened in the currency markets yesterday by selling US dollars for the first time since 1998. The move came only hours after Japan's central bank left rates unchanged, even as prices rise there. So that pushed the US dollar to a new 24-year high versus the yen, which prompted the intervention. And confirmation of that intervention sent the US dollar down over 2% versus the yen. Well, emerging market currencies plummeted and global stocks fell to close at a two-year low overnight. The Nasdaq and S&P 500 fell for a third straight session. Growth stocks were hit particularly hard, including tech companies. Of the 11 major S&P sectors, consumer discretionary and financial stocks were amongst the biggest decliners. Shares of mega-cap technology and growth companies like Amazon, Tesla, and Nvidia fell. And major U.S. airlines were also down, with United and American Airlines all falling for the third straight day. Benchmark U.S. Treasury yields hit an 11-year high. And just this morning, Costco topped Wall Street estimates for quarterly results. Net sales increased by 15.2% on the quarter. And FedEx outlined cost cuts of up to $2.7 billion from parking planes, suspending some Sunday deliveries, and shuttering corporate offices after falling demand hammered first quarter profits. And that really did spook markets as well. And looking at the day ahead here, Suncorp is holding its AGM today. And around the globe, S&P Global issues preliminary September PMIs for the manufacturing and services sector, with rising interest rates and cost pressures beginning to weigh on Australian business activity. Also tonight, U.S. Fed Chair Jerome Powell will provide the opening remarks at the U.S. Federal Reserve Board's Fed Listens community event in Washington, D.C. So how does that set us up for trade here today? Well, the local market is set to open lower. Futures are pointing down about 0.25% or down 17 points after the public holiday we had yesterday. Well, that does it for the day ahead. I'm Nadine Blaney. We'll see you next week.